Hey everyone, welcome back to Drawbridge Finance. Today I'm going over my quick options selling premium calculator. Boy, that's a mouthful. Thank you guys for all the support on the channel. It has been an amazing month. I've had tons of views, tons of growth. My Patreon account has been growing, which has been amazing. We've been having tons of chats. We've been putting on tons of trades. If you guys are interested in joining the live trading group, I'll put a link right up here. You guys can click on that and come join in the fun because we trade every single day, Monday to Friday when the markets are open. Now, of course, the American market is closed today because it's Monday, Memorial Day. Happy Memorial Day to my American subscribers. But for those trading the Canadian market, of course, we put on a couple trades today that are going to expire at the end of the week. Now, the whole plan with this is to put on weekly trades and make money every single week, making small amounts of money that add up over time. What we want to do is limit our risk. So we have to use a calculator to kind of calculate out how much return on investment we're making or return on capital. I have a little spreadsheet that I use all the time. It's probably my most requested spreadsheet, and I finally am releasing it publicly, so it will be available on my Etsy store and to my patrons for the next week. So anybody that signs up or is already a patron for the month of May 2020, you can just go and download the files. If you're new to the channel and you don't already have the notifications bell on, remember to turn that on because I occasionally post trades live anyway, so you get those notifications just by turning on the bell, which is pretty amazing. Anyways, today I want to just jump right into this simple little spreadsheet, but very powerful. The one that I use probably more than anything else in my day-to-day trading. I'm gonna go over the numbers one. I like numbers, that's the one I use. The summary page, basically what it's showing is it's got a column down the side here, and that's the currently open options contract. So this is where I would keep my list of all my contracts that I have open. And now this is just kind of like a quick notebook for me. It's just a little place where I can record the data so I can at a glance look at it and compare it to my actual portfolio on my account. There's a couple pieces of key information that I have here. The original transaction date, everything in gray and yellow automatically populates. So all we have to do is fill out this white column here, and I'll show you how that works. So when you first open it up, it's showing April 16th. This is the original transaction date, and then the expiration date, and then the description of what it is that we've actually sold. How much credit we collected is here in gray. Now this column right here is why I use this calculator all the time. It actually shows my personal targets, my minimum and maximum loss. And I believe in having an exit strategy when we put on a trade. So I don't just blindly go into any trade. I know exactly when I'm gonna get out on the profit side or on the loss side. And that's why I have this summary sheet, because that just shows me at a glance all my profit or loss targets. Let's get into the individual sheet and where this information is coming from. Today, because the American markets are closed, I'm going to show you a Canadian sheet, but these are really straightforward sheets. You can use them in any currency. I have them default set to US dollar or Canadian dollar with the conversion set up, but if you want to use it for any other currency, it's as simple as just changing the currency. Let's just go over to one of these sheets and I'll show you what I mean. So the first thing we have is the base transaction fees. Now, as Canadians, a lot of people pay $9.95. I don't. I use Interactive Brokers because it's a super low cost brokerage. Then I would put in the information of how much fee per contract I would pay. So a lot of Americans will have 0 at the top here, and then they might have like 65 cents, 25 cents. Now by default, these are filled out, but I'm gonna make a copy. So I'm just gonna right click and I'm gonna say duplicate. And then the first thing I do is rename this. If I'm looking, today I'm looking at CM on the Toronto Stock Exchange. So I'm gonna put that there. And then I would just fill this out in position description CM.TO. What am I gonna sell? I'm gonna sell a naked put because I'm using this as a strategy instead of buying stock. So today I'm gonna pull up, we're gonna look at the 78 put. I'll show you how I get there, but that's what I'm gonna sell today is the 78 put. So I enter that information, and then I put the original transaction date. Today is May 25th. So I type that in, and you can see it has some errors. Part of those errors are because the option expiration date is currently before the original transaction date, which doesn't work out. So we're gonna look at the May 29th expiration, and I hit enter, so that the data starts to fill out again. And then the initial credit per contract. Now, I actually sold this position this morning for 25 cents, so I'm gonna put this in, 25 cents, and it's gonna start to give us some data that we can look at. Now, number of options in this strategy, this is manually filled out, but we're selling one naked put. So if this was an iron condor, there would be 4 contracts, and then you would have 4 options in the strategy, and then the number of contracts you actually sell would be here. In this case, I'm selling one naked put. So I have one contract in the naked put position, and the number of contracts that I'm selling are one. The margin requirement per Canadian contract is right here. Now, some of this information I get from my actual brokerage. So the first thing we're gonna look at, implied volatility rank. So on Interactive Brokers, I have my stocks, and I always sort them by IVR. So I click on this little button, it sorts it by 52-week IVR. You can see not much is open today, these are all white dots, but I do have CM right here, and it has an IV rank of 29. Now for me, that's a high enough volatility that I'm gonna consider selling an option on it. So that's the first record that I put into the spreadsheet. This is gonna be 29. You'll see how that's important, because what we want to do is sell when they're at high IV rank and then buy back the put later when it's a lower IV rank. The rest of the information, initial credit per contract, what is the option price? To get that, we click on the stock and then the option chain will come up. We make sure that we're in May 29th, which is what the expiration date that we're looking at. And then we look at the chain. Now the puts are on this side. So the 78 put, right now, the bid is 20 cents and the ask is 31 cents. So we know that we'll probably get filled close to the mid price on that, and that's where we get that 25 cents, which is what I actually put this trade on for this morning. And it could be put on again for the same price at the end of the day. So you can see these option prices don't move all that much. And that's why I trade these strategies. These aren't super fast moving. This is through the whole day, the price is the same. So what I'm gonna do is I'm gonna click on that. I'm gonna click on the sell. Down here in the strategy builder, it's gonna tell me a couple things. So it's gonna say sell to open, one contract, May 29th, the 78 put, tells me my delta is 10%. So it's a 10% chance that it's gonna expire in the money. We want it to expire out of the money. So that means it's got an almost 90% chance of being profitable. The theta decay is 8 cents. This is all multiplied by 100, so we have an $8 a day theta decay. So if we sell this, the option price should reduce in price by $8 each day for the next 4 days. It's always a little bit higher than in reality, but that's kind of the goal. And then it tells us right here, the margin impact. So this morning when I put this on, it was 2038, now it's 2050. I'm just gonna use those numbers. Let's put in the 2050 so I can do this assessment. So I'm gonna put in 2050. Now that I've done that, I can look at this blue section. So if I put this trade on today, if I sell it and collect this money, this $25, I'm putting up $2,050 in margin. What is my return on investment? So the days to expiration are 4. That's calculated between May 25th, May 29th. The premium collect is $25. That's the 25 cents times 100 shares. And then the premium received minus the fees, $23.75. We can see that math. It's just taking off the $1.25 that I pay. So that's where we get that number. So the daily projected profit loss is going to be $5.94. Really simple division here. So 23.75 divided by 4 days, $5.94. So the projected return on investment, again, fairly simple math, $23.75 on my margin of $2,050. So a 1.16% return in just 4 days. What does that work out to annually? 105%. I like a trade like this because I have a 90% probability of profit, and I'm likely gonna make 1% this week. Now, if I can repeat that for the whole year, then I'll make 100% return this year. Now I have to keep these in check. So this yellow section becomes the most important part, and that's why it's on the summary sheet. The buyout target at 50% for max profit. Now this is a really short-term trade, but if I was trading a longer-term trade, then I would use this as my target. If the option price reduced to less than 50% of my initial credit, in less than 50% of the time, I would close this trade. So that price would be 11 cents. It's about half, it's just less than half in most cases. And then the buyback for 2 times the max loss, and that's 70 cents. Now, I see people doing covered calls all the time, and they totally mess this up. I hate to say they mess this up, but they don't watch their target. They're letting that stock run up in value, and the call gets way too expensive. Less of a deal on the put side, because if you get in trouble, all you're doing is buying the stock. But on the call side especially, that 2 times max loss will make or break your account. Like, do not trade past this point. If the stock goes crazy and starts going up in value, once the option hits 70 cents, I would buy this out for a loss for 2 times my money. Okay, so now let's focus on the bottom of the chart. This is where the real magic is, because this is going to help us determine what we should do with the trade. I've got it set up so that it automatically tells us what to do, and it's color coded. This white cell right here, that's the only data entry we can put in, and what we're going to do is we're going to say put in a value. So we wake up tomorrow and the option price is a little bit cheaper, say 22 cents. So we put that in and oh, it's not working. Now I'll tell you, you can't really do this on day one because it's calculating the date. So it says the days held, and you can see in here that it's actually using today's date on the computer, so it knows how many days the option has been held. So I'm going to make a quick adjustment just so for demonstration purposes, but if you're checking in subsequent dates, it's going to show you that there's been a time change. So if we look at this 2 days from now, and the option value is 22 cents, it's going to say hold right here, action required hold. And the reason that it says that is because that value is in between 10 cents and 69 cents. Now, if we can get this option value to drop down below the 10-cent mark in less than half the time, it's going to increase our simple annualized return. And I'll show you how that works. Let's just say this went to 9 cents. It's going to highlight green and it's going to say buy back for a profit. The reason it's saying buy back for a profit is because 9 cents is less than 10 cents. 10 cents is our exit target. Now, because we can do that in 2 days, theoretically, of course, then the cost to buy out was going to be 9 cents plus our commission. It's going to cost us $10.50. So the realized profit or loss is going to be $13. Now, remember, this is on a $2,000 trade. So $13 is a realized return on investment of 0.6%. Now, it doesn't sound like a lot, but oh, believe me, this adds up to a ton of money over time. And this is where we can see that. If we did this repeatedly, week after week after week, we would get 116% return annually. The expectation was that we were only going to actually make 105%. And that's why I like to close early, because if I can get out of a trade early, I will make a better return over the whole length of time. And that is where we really start to build wealth, is when we can compound those returns and make even more money. So now when we go back to the summary sheet, all we have to do is type in cm.to, which is the name of this spreadsheet over here, and hit enter, and it will automatically fill in the rest. So it tells us we opened it May 25th, it expires May 29th, we have a naked 78 put, and we're looking for a target buyout of either 11 cents, or if it goes against us, 70 cents, and we collected 25 cents originally. Now I have a closing debit here. Say we're going to close this in a couple days. Maybe the stock goes way up in the next couple days and we get out of this for -6 cents. We just type in -6 and it would tell us what our credit was to date. I like to sort mine by expiration date, but I expect that there's going to be a lot of customization, so that's why I keep them kind of simple and basic and allow you guys to expand on it. Because I'm Canadian, I have to do a conversion, but the sheets are designed so that you can download the US dollar default one or the Canadian dollar default, and then these spreadsheets are actually built in there for you. So just make sure you're using the right one. For me as a Canadian, my margin is calculated in Canadian dollars, so I place that in here, but all the transactions are done off US dollars. So it automatically converts and fills in the information. If you wanted to change currency, you would just literally go to the format and you would just change to whatever currency you wanted. Now remember, if you're interested in buying one, they're available in my Etsy store. I'll put a link right up here, somewhere up there, and I'll have them available for patrons for the next week. So hopefully you guys enjoy this spreadsheet and stay tuned, because we're gonna do some more videos like this, selling more option premium, making more money, so we can all get rich together. Thanks so much for watching.